Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of August 26th through 30th. With that, let's start off with the markets. So the S&P 500 or SPY has officially given us that rapid V-shaped recovery that I predicted a couple of weeks back. And during this rapid recovery move back to the upside, we simultaneously filled in all the 4 gap down areas that we were worried about during this corrective move down. And if you guys forgot, we got our first gap down area immediately after we printed a new all-time high price print sitting at $565.16. And so with this immediate rejection, we continue to waterfall down, and then we had those recession fears and also that yen carryover trade fears as well. But ultimately, both of them came to pass, and people eventually forgot about it. And how do we know this? Well, because of the fact that we had this V-shaped recovery. Now, specifically for this week and into next week as well, I want to look at the S&P 500 from a very simplistic microscope, okay? And the reason being is that we are currently inches away from a new all-time high price print. All we need to do is go over, again, the current all-time high price print of $565.16. Now, how will we do that? That's a great question. So if you take a look at last week's price action, we have begun to basically pause this V-shaped recovery move back to the upside. And during this pause, specifically that began on Tuesday, we began to make a nice Momo bull flag. And a Momo bull flag, or rather momentum-filled bull flag, is usually a very small micro bull flag that leads into another volume-filled rapid breakout to the upside. So eventually just leads into another higher high and higher low scenario, which is again a textbook uptrend. And during the time that we are moving sideways, it will allow my daily 10 and even also my daily 21 SMAs to catch up. But most importantly, I would love to see the daily 10 SMA catching up this week so that we can provide some foundation for the price to catapult away and into new all-time highs. So just for tomorrow or maybe even into Tuesday, I would love to see some more sideways, especially after last Friday's inside candlestick on the daily time frame here. I would love to see more tight price action and sideways so that we can complete this Momo bull flag. And that's the reason why I have given you guys this visualization of this descending resistance trend line so that we can see the price adhering right underneath this descending resistance trend line and ultimately finding a lot of energy to use to finally catapult away and into that new all-time high price print. Now, personally for me, I don't really care where we go as long as we're able to break over the current all-time high price print of $565.16, then we are good to go. So I don't care if we hit 570, 572, or 575, as long as we can make a higher high compared to the previous pivot high point, which is right here, we should be good to go to make new all-time highs and continue this textbook uptrend of higher highs and higher lows. All right, and next we have IWM. Now IWM looks a little bit different compared to the S&P 500. So the reason why the S&P 500 basically paused its current run-up, its rapid V-shaped recovery move back to the upside, is that all the laggards were basically moving higher compared to the leaders that began to pause. Hence the reason why when you compare IWM to the S&P 500, you can clearly see a difference from last Friday's price action. The S&P 500 closed with the inside daily candlestick, while the Russell 2000 closed with a very, very bullish daily candlestick. and it was also backed up by volume. So for IWM, since we have broken out of this previous resistance level of 216 on Friday, which to remind you guys here, was also another target during our initial breakout move to the upside, we should be aiming for the next major price target or resistance level of 226.50, which was also another target back when IWM broke out very, very quickly. Okay, so again, I want to be looking at the markets in a very simple perspective. And so for IWM, a simple target to 226.50 would be satisfactory for me. All right, now before I talk about the 3 swing trade ideas that are essential to have leading into a rate cut environment, I want to briefly go over why the markets are moving the way they are, especially after last Friday's price action. Now I know that this isn't how these videos usually go, but bear with me. Now, I talk a lot more on everything that I am about to talk about here in this report, so make sure you guys read that first. So first off, let's take a look at the US dollar, or ticker symbol DXY, and let me give you guys a quick basic lesson on currencies. So when interest rates are going up, the value of the dollar rises in tandem, which brings more buying power for Americans overseas. And on the other hand, foreigners suffer as their currencies devalue and depreciate, making it less attractive to buy the higher priced American goods and services. So basically, US exports essentially decrease in volume, while imports to the US from foreign countries increase in volume. Now, when interest rates are moving down, the value of the dollar also moves lower in tandem, and there's less buying power for Americans overseas. And so foreigners will love this, as prices on American goods and services have also gone down, but at the same time, domestic Americans will also enjoy this as they spend more on domestic goods and services rather than on foreign goods and services. And so the complete opposite occurs here, and exports essentially increase in volume and imports decrease in volume. Now, there are nuances to this, of course, small nuances, but that's just a small summary of the basics on currencies. Now, as seen here, this is a major reason why the US dollar has been moving lower ever since it made that major pivot high point back in October of 2023. The markets began to increasingly anticipate rate cuts to occur in early 2024, which obviously didn't happen in hindsight, but this anticipation alone caused the dollar to make its final pivot high point, as it never retested, reclaimed, or made a new higher high compared to this one right here, as indicated by this yellow arrow. Now, if you guys also remember, I told you all to start looking for a UUP short in that same month of October. And so I ended up signaling the 30 put strike contract that expired in January 17th of 2025. And this was a very logical contract to choose, in my own opinion, as it accounted for the high probability that the dollar's general trend will be down, even with its month-to-month fluctuations to the upside and to the downside, as it continued to anticipate the first rate cut in the fiscal year of 2024. And so with this information in mind, I can now segue into the first 2 out of 3 swing trade ideas for this week. With the US dollar making a consistent downtrend and our first rate cut looming over us, these 2 swing trade ideas will benefit from both of those actions. So first, we have mstr, which is notoriously known for its continuous and continuing buying of Bitcoin. And that is mostly the reason why the company's price action looks eerily similar to Bitcoin itself. In fact, MicroStrategy holds the most Bitcoin out of any publicly traded company out there. And since Bitcoin is considered a commodity, mstr will most definitely become a beneficiary to the upside potential that Bitcoin holds due to the fact that the dollar is making a consistent downtrend and with the first rate cut coming up as well. And so when the dollar goes down, commodity values tend to go up, giving us that inverse relationship. Now, looking at the weekly chart here for mstr, we have a very textbook bull flag that ranges from 181.50 to 101. So a very, very wide range. And very recently, during that overall market correction, we saw the price retesting this 101 level or area, or I would say a demand area from 101 to 102. And we are now somewhere in the midline area of this massive range that completes this very textbook flat bull flag. And so it kind of makes sense and it's kind of logical to assume that the next area that the price wants to go to will most definitely be the upper range resistance level of 181.50. And so from a broader perspective, from the bigger picture perspective, we should be expecting mstr to retest 181.50 as long as Bitcoin also continues to move to the upside. So specifically for us this week, after a very nice breakout last Friday from this very tight price action that we saw and that eventual breakout over this 141 horizontal level of resistance, we should be seeing a continuing entry point over this next level of major resistance at 150.50. And that's the reason why we have our long entry point over 150.55 for confirmation. Now, there is a little bit of a nuance to this as well, because if the price decides to pull back tomorrow and it tries to retest my daily 50 SMA, which it just broke out of last Friday, we can have an opportunity to see a red to green type of move where it can give us a bit of a stronger and a bit more confirmed entry point over 150.55. So again, we just want to see a retest of the daily 50 SMA, this dark blue line here, as a new area of SMA support, which will allow the price to pivot and catapult over 150.50, giving us this long entry point over 150.55 for confirmation. Now, as I've said earlier on the weekly time frame, the only targets that I have are the upper range levels in the macro bull flag chart pattern. So that means the two targets that I have for this ticker will be 171.50 on the daily time frame here, and then that massive upper range resistance level sitting at 181.50. All right, and of course, make sure you guys read the report to see and read all the other game plans and all the other details that I have for this specific swing trade idea. Second, we have yet another commodity, but this time we're going for a metal, specifically copper or FCX. That's right. This was a pretty popular trade idea when it began to break out of that massive wedge chart pattern back in early March, right around here. Okay, and so we eventually got some massive returns on those specific swing trade ideas. Now, seen here for FCX, this previous $39 horizontal resistance level has recently been used to become a new support level as the price came back down to perfectly retest it. And this caused a massive pivot that allowed the price to launch back upwards and start a new attempt at a reversal. Now, this is only an attempt because we have yet to conquer this previous pivot high point indicated by this yellow arrow. And the only thing that is truly giving us that quote-unquote go signal is the close over the daily 200 SMA last Friday. So this yellow line here. And so if we're able to see the continuation of this uptrend, since we have officially gotten a nice bullish reversal or attempt at a reversal, and the fact that we're seeing the daily 10 SMA crossing over the daily 21 SMA now. So I've seen on where the Thursday's candlestick was, we should be seeing a short to mid-term trend to the upside. Now, for our entry point, I want to keep it very simple as well, just like with mstr. I just want to see a long entry point over the previous high of the day, which was last Friday's high of $44.82. And so I'm going to use that whole number level of $45. And for confirmation, our long-term entry point will be $45.10. And now, there is one hindrance that will prevent us, that could potentially prevent us from breaking over this previous pivot high point indicated by this yellow arrow. And that is the daily 50 SMA. And so this daily 50 SMA is now curling downward to meet up and catch up to the price after FCX lost it on July 15th. And so if this looming daily 50 SMA continues to curl down lower, that means that we can see a little bit more resistance and a lot more pushback from sellers, which is the reason why we need to see more elevated volume like what we saw last Friday to continue in this very week alone. And so the first kind of target area for us for FCX will be that retest of the daily 50 SMA. But depending on how the price reacts to this daily 50 SMA, I will try to hold on to this position as long as possible because, again, we have major resistance levels that the price still has to retest, like 46.50, which is also where the previous pivot high point area was very, very close to retesting, right? So if we're able to get past the daily 50 SMA, 46.50 will be the next logical area for the price to target. And then if we're able to continue to stay over the daily 50 SMA, then we can hit the next major level of resistance at $48. And if you guys are feeling a bit more bullish on copper itself, then FCX can eventually hit that major weekly level of resistance sitting at $52. So this is the area where the price was not able to hold previously during that initial breakout area, which also allowed a bunch of sellers to come in and eventually cause this waterfall move down. All right. Last but not least, we have RH, or Restoration Hardware. That's right, we are revisiting this luxury home furnishings company since the last swing trade idea on it failed due to its earnings report and reaction. Okay, you guys can see that right over here. But why RH again? Well, this one is also a great stock to look at during a rate cut cycle because it is a consumer cyclical stock, or specifically a consumer discretionary stock. I talked in depth about what all of this means, discretionary and non-discretionary, in my live from last Thursday. So if you guys want to watch that replay, the link is provided down below in the description box. Now, as seen from last Friday's candlestick, this one also had quite the bullish ride and reaction into the close, as it was also very excited about what Jerome Powell said during his Jackson Hole speech about rates and potential monetary policy pivots in the near-term future. And so that perfectly aligns with this stock being a consumer cyclical stock. And so with RH, this should provide a very good launch pad, since it's been moving sideways after our initial swing trade idea that failed due to earnings, as it's been moving sideways for months. And during this sideways price action, as seen on the weekly here, we have created a nice descending resistance trend line. And as long as we're able to break over this descending resistance trend line, we can see a continued move up higher and possibly into earnings, which is set around September 5th of this year. Okay, well, the next quarterly earnings is what I meant to say. And so that's the reason why we have our confirmed long-term entry point over 292, as that's where I would assume the price will be at to provide a nice retest of this descending resistance trend line to turn it into a new level of descending support trend line. Right? Again, once we decide to break over this descending resistance trend line, I expect the price to be sitting around 292 for us to execute that long entry point and long position on RH. And I would expect to see a retest of this descending resistance trend line to turn it into a new descending support trend line. Now, tomorrow, specifically tomorrow, if we do see all of these laggards that began to bounce on Friday have a small pullback day, we can see an earlier but riskier entry point at 280. Specifically, we want to see a bounce at 280. Why 280? Well, this was a previous level of resistance as well, specifically a horizontal level of resistance. You guys can clearly see that right around here as well. Okay, so as long as we're able to bounce and pivot away from this previous level of resistance and turn it into a new level of support, we should be able to continue to catapult up higher and eventually break over this descending resistance trend line. And at some point, you guys can maybe even add more once we do see that breakout over this descending resistance trend line if your first entry point was that bounce entry point at 280.10. Now, as far as for the profit targets, I only have a very simple profit target for RH, 320.50. This is a huge area of contest or level of contest for both buyers and sellers, as seen over here and over here. Right, we saw the price not being able to hold this 320.50 area, and we continue to stay underneath this 320.50 area, and we haven't even retested it since we broke out of it very, very quickly and then lost the 320.50 area very, very quickly. Okay, so very simple swing trade idea for RH, and hopefully you guys are able to catch this one once it begins to move, since this is also a consumer cyclical stock. So this one should start getting a bit more bullish attention and more bids from smart money as well. All right, that is it for this video. If this technical analysis video was very insightful and most importantly applicable, make sure you guys smash that like button down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. But most importantly, once you hit that subscribe button, hit that notification bell to know when I am live on Tuesdays and Thursdays and when I have uploaded a new YouTube video. Good luck, and I'll see you all tomorrow morning.